PantheonAI presents Market Holds Steady, Crypto Dips, eToro Cites War Risks, Cramer's Caution. Welcome back to the PAI Morning Briefing.
And good morning, everyone. I'm delighted you could join us.
It's May 15th, 2025, and we've got a lot to unpack from the markets today. It's certainly been interesting.
Interesting is a good word for it. Let's jump right in with that quick market overview, shall we?
Absolutely. So the S&P 500 is sitting right around 5874.92, showing a modest gain, about 0.087%.
Okay, slight uptick there. And the Dow Jones? How's it looking?
The Dow's doing a bit better, actually. Up by roughly 0.346%, trading around 41,922.7.
All right, so the big boys are seeing some green. What about the Nasdaq and the Russell 2000?
That's where we see a bit of a dip. The Nasdaq is down by nearly 0.135%, around 19,505.6. And the Russell 2000 is off by approximately 0.2% at 2,073.16.
Okay, so a bit mixed then. Gains in the S&P and Dow, but slight dips in the tech and small cap space. What about crypto?
Crypto's having a tougher morning. Bitcoin is trading around 101,732.43 after a drop of nearly 1.7%.
Oof, that's a notable dip. And Ethereum?
Even steeper. Ethereum is down by about 4.39% at roughly 2,495.42.
Wow, over 4% down. So these mixed signals across the board. What does that tell you about the market right now?
It suggests a market that's really trying to find its footing, I think, after some recent fluctuations. It's not a clear up or down day everywhere you look.
Right, and that leads us nicely into the major market trends we're seeing, doesn't it? There's a sense of consolidation, particularly in U.S. equities.
Exactly. That modest uptick in the S&P and Dow, it's being tempered by that slight retreat we just mentioned in the Nasdaq.
So you could almost say it signals a cautious optimism, maybe. Investors waiting for the tech sector, the Nasdaq, to show a clearer direction.
That seems to be the read. Trading volumes have actually been pretty lively, which is interesting. People are finding points of entry even in what seem like relatively calm waters.
Yeah, it's not quiet out there. And on the macro side, it feels like investors are still really weighing everything up. Economic reports, trade developments, geopolitical tensions, it's all converging, making for some intricate market behavior.
Definitely. And the cryptosphere, it often feels like it's on its own planet, but it's facing its own challenges right now, too.
Totally. Bitcoin's almost 2% decline. Ethereum's over 4% dip. It really highlights that volatility we always talk about with digital currencies.
Right. Some experts are calling these natural corrections in the cycle of digital asset evolution. It's just part of the ride.
But others are cautioning that significant macroeconomic uncertainties could add even more pressure on this asset class. So you've got that duality happening.
It's fascinating to watch. And yeah, it definitely keeps you on your toes.
All right. Let's shift gears and dive into today's news. We've got a really rich tapestry of stories that give us some great insight and, frankly, excellent conversation fodder.
Absolutely. And we have to start with the man himself, Jim Cramer's top 10 things to watch this Thursday.
Oh, Cramer. Always worth a listen. What's his take today?
Well, he points out that the S&P 500 is tracking for a lower open today, after 3 straight winning sessions. It seems, according to him, that after a run of optimistic trades, caution is returning.
Okay, so that aligns with the cautious optimism we were just talking about. What's on his list of 10 factors?
He mentions evolving market sentiment, upcoming earnings announcements, and, of course, those ever-important shifts in macroeconomic indicators. He's got his usual mix of analysis and, theatrics, which always makes you pause and think about your own strategies.
Yeah, he does make you think. It raises the question, doesn't it? Are we overreacting to these near-term movements, or is there a genuine underlying shift happening?
Right? It's the million-dollar question. Moving on, here's a serious note, and it comes from a somewhat unexpected source, the IPO filing by eToro.
eToro? The trading platform? What did they say?
Their filing cites the ongoing Israel-Hamas conflict as a potential business risk.
Wow, that's a stark reminder, isn't it? That even companies not directly involved can be impacted by global conflicts.
Totally. The firm is really candid about it and their risk factors, acknowledging that rising geopolitical tensions in the region could hit their operational efficiency and growth.
It really does make you realize just how interconnected our global financial system is. You might think a tech startup could ignore conflicts thousands of miles away.
But in today's hyper-connected world, global turbulence sends ripples everywhere, far beyond the epicenter.
Absolutely. Okay, next up, let's talk transatlantic trade. We heard that the EU's Šefčovič has agreed with the U.S. Commerce Secretary Lutnick to accelerate trade talks.
This is a big deal, especially with the backdrop of recent tariff debates and those long-standing trade imbalances.
Right. Some insiders are calling these talks the toughest negotiation for the current U.S. administration. And there's been a lot of speculation about whether the EU will accept that 10% floor on tariffs,
which many see as a direct challenge to established trade dynamics. And let's not forget, the U.S. has a pretty significant trade surplus with the EU, so these talks are a delicate balancing act.
Definitely. As we watch this unfold, it makes you wonder, will pressure build on policymakers to find a middle ground? Or are these talks just going to become another protracted debate with no clear outcome?
Good point. Shifting to the domestic arena, we saw wholesale inflation post its biggest drop since 2020.
That sounds like good news on the surface. But there's a catch, isn't there?
Yeah, it seems to be more of an anomaly than a trend. It was driven by falling egg and gasoline prices, plus a quirky category measuring certain business profit margins.
So analysts are saying this dip is welcome, but probably not sustainable?
Exactly. Given the underlying structural factors driving inflation, it's unlikely to last. It creates an interesting juxtaposition for investors, doesn't it?
Should they be relieved by this temporary dip, or should they be bracing for things to tick back up?
That's the question. Our view is it's a signal to remain cautiously optimistic, but definitely not complacent.
Right. Retail sales have also been in focus. April saw a noticeable petering out.
Yeah, that's linked to the tariffs starting to take effect. Remember earlier in the cycle, consumers rushed to buy imported goods, especially cars, before prices went up?
Oh, right. And now that the tariffs are fully in effect, Americans are scaling back.
Exactly. They're exercising caution about how these trade wars might evolve. It's a classic example of consumer behavior reflecting broader economic anxieties.
It really makes you ask, are these tariff-induced behaviors setting us up for a prolonged period of subdued domestic consumption? Or is this just a temporary adjustment?
Another good question for the books. On the housing front, here's a story that's really fascinating. Despite an easing of the housing shortage and more listings, the market is still historically unaffordable for so many buyers.
That's a tough one. So even though supply is improving, the affordability issue persists?
Precisely. The latest report really drills down into how out of reach it remains. It's a reminder that resolving basic supply-demand doesn't automatically fix everything.
It brings up those big questions about long-term policy, doesn't it? Should governments step in more aggressively to make housing accessible, or is the market just too entrenched now?
Yeah, it feels like we're past a simple fix. Industrial production in the U.S. has also been a topic of discussion.
What's the latest there?
Data shows it was essentially flat in April, another sign that the economy might be feeling the stress from ongoing tariffs.
Uncertainty and supply disruptions are the culprits, I assume.
That's what experts are saying. It's described as a, quote, pause in the nation's industrial output. It's interesting how trade policies meant to protect domestic industries can sometimes create bottlenecks instead.
It's a tricky balancing act, for sure, both for industrial players and policymakers.
Definitely. Now, let's look at the labor market. Initial jobless claims held steady last week, around 229,000.
Okay, stability in claims is usually a good sign, right?
It is. It suggests the underlying health of the labor force is still robust, despite all the economic headwinds we're facing.
Good to hear that. But it's such a dynamic environment. Could subtle shifts here have bigger implications?
Absolutely. For consumer confidence, spending patterns, it all ties together. It does beg the question, is this steady labor market enough to offset the uncertainties in other sectors, or could future policy changes create new challenges?
Right, and speaking of shifts, we've seen some corporate transactions on the radar.
Yes, two notable ones. Envirotech Vehicles signing a letter of intent to acquire Kymera, and Apple iSports moving to acquire AmeriCrew.
Those represent strategic positioning, don't they? And they underline the consolidation trends happening across various industries.
For sure. Envirotech acquiring Kymera hints at a growing focus on sustainability in the automotive sector. And Apple iSports buying AmeriCrew? That points to tech companies branching out into lifestyle and sports.
Interesting. It raises a tantalizing prospect for investors. How will these strategic acquisitions reshape market competition over the next few years?
Exactly. It's not just balance sheets changing hands. It's about reshaping entire markets. Let's switch gears now and do a broader sector analysis, starting back with tech.
Okay. The tech sector, always a roller coaster, isn't it? Enthusiasm and trepidation all at once.
Totally. That slight dip in the Nasdaq today could be a temporary pullback, but it reminds us how volatile tech stocks can be. Innovations and product launches drive big price swings in short periods.
True, but the underlying fundamentals for many are still strong, right? Like that Apple iSports acquisition we just mentioned.
Absolutely. As tech companies move into new areas, they're not just adding to their books, they're rewriting the playbook on diversification. It's almost like watching a dynamic game of chess.
Oh, I like that analogy.
Yeah. Think of each acquisition as a well-timed night move. It could protect your position or totally pivot your strategy. It's fascinating.
Nice. Shifting to energy, that story's been just as dynamic.
Definitely. Global energy markets are being hit by supply constraints and evolving consumer behavior. Recent trends suggest oil prices might be stabilizing, but demand from emerging markets? That's still a wild card.
So, kind of like trying to predict the next twist in a thriller? It seems predictable. Then bam, something unexpected happens.
Exactly. Investors in energy have to factor in regulatory developments, geopolitical tensions, even weather patterns. That interplay between global events and local markets adds a ton of complexity.
No kidding. And in finance, big headlines are tied to those regulatory and geopolitical developments we've been discussing.
Absolutely. The EU-US trade talks? Huge impact on financial markets. Negotiators are exchanging proposals that could really affect tariffs and trade surpluses.
And financial institutions are watching this closely, because shifts in trade policy impact capital flows and interest rates.
Right. This is the kind of environment where even a small misstep can send shockwaves through portfolios. It's worth asking, with all this dynamic uncertainty in finance, are we seeing the start of the next monetary recalibration or just a temporary adjustment phase?
Good question. Let's expand our view now to global market implications. It feels like events in one region are more intertwined than ever with trends around the world.
Totally. Those accelerating trade talks between the US and the EU, they're not happening in isolation. They can create ripple effects that touch emerging markets everywhere.
Like how changes in U.S. trade policy could affect commodity prices, which then impacts developing economies reliant on raw material exports.
Precisely. Or geopolitical tensions in the Middle East. They don't just disrupt local markets. They pressure global supply chains, affecting production and pricing worldwide.
It's a vivid illustration of how interconnected we are. A spark in one corner can quickly ignite a blaze across multiple regions.
It really is. As much as we try to compartmentalize local events, the global canvas remains incredibly unpredictable.
So looking ahead, what are some expert insights or predictions you're hearing?
Many of our colleagues suggest that while the market's navigating headwinds right now, the underlying economic fundamentals are still intact. There are pockets of strength out there.
Okay, so despite the volatility in tech and crypto, the broader equities market shows resilience?
That's the read. We're kind of at a crossroads, where short-term uncertainties meet long-term growth potential. It's a classic don't judge a book by its cover market dynamic.
Right. Like the dip in the Nasdaq or crypto, it might actually be a healthy correction, a necessary reset before the next move up.
Exactly. Some pundits even argue these jitters are good entry points for long-term investors. Every correction has the potential to unlock hidden value.
But you have to be mindful of the broader context, especially with global tensions and trade talks that could swing sentiment.
Oh, absolutely. And speaking of swings, let me inject a little humor here. If markets were as predictable as my morning coffee routine, I'd have already programmed my trades to auto-pour profits.
Haha, if only. But yeah, in investments, surprises are pretty much the only constant.
True that. Let's take another look at what this means for sectors, focusing on emerging trends that could reshape things. Tech again, but with a forward-looking lens.
Okay, AI, machine learning. Tech giants are investing heavily in next-gen capabilities, right?
Right. It's not just about pushing boundaries. It's about creating new revenue streams that can cushion them from external shocks. That Apple iSports venture? It's a bold step.
Diversifying their portfolio, integrating lifestyle with tech.
Exactly. It's that kind of strategic thinking that excites investors. It makes you ask, in this era of rapid tech evolution, is your portfolio positioned to ride that next wave of innovation?
Good question to be asking. In energy, the interplay between sustainability and traditional production is still shaping decisions.
Definitely. Global pressure for cleaner energy means major players have to rethink their long-term strategies. Investors are watching how companies balance immediate profit with environmental considerations.
Especially with nations committing to ambitious carbon reduction targets.
You could almost joke that energy companies are trying to be both the reliable old friend and the daring new innovator at the same time. It's a fascinating dynamic for analysts.
Trying to predict the future of fossil fuels versus renewables, busy job. And in finance, regulatory shifts and geopolitical coordination are still front and center.
Absolutely. Those EU-US trade talks picking up steam? Banks and capital markets are bracing for potential volatility in cross-border transactions.
That careful balance in trade negotiations could spill over into financing costs, lending, even risk appetite for institutions.
It makes the financial sector a real bellwether for the economy. Investors really need to monitor this. Will we see a new era of regulatory cooperation or another round of tit-for-tat tariffs that disrupt confidence?
The stakes are high, and globally, the implications of all these trends are profound. It's not just North America or Europe.
Exactly. Trade discussions, geopolitical risks, they extend to Asia, Latin America, everywhere. In Asia, for instance, US-EU trade policy can influence commodity prices, affecting countries reliant on exports.
And emerging markets dealing with inflation and currency pressures might see these global shifts just complicate their recovery further.
It's a vivid picture of how interconnected our financial world is, a delicate dance where one misstep globally can send shockwaves locally.
Definitely. So, as we wrap up today's briefing, what are some final thoughts and key takeaways you'd like to share?
First, the market is still in a state of cautious adjustment. Those gains in the S&P and Dow, they offer optimism, but the dips in the Nasdaq, Russell 2000, and crypto remind us it's a balance of risk and reward.
Right. Not a clear runaway market.
Exactly. Second, global developments, trade talks, geopolitical conflicts are playing a huge role in shaping sentiment. It's vital for everyone, investors or just interested listeners, to keep a pulse on these interconnected factors.
Agreed. And the sheer diversity of today's news, from Cramer's take to corporate mergers, it just reinforces how complex markets are.
They really are. They need keen observation, strategic thinking, and maybe a dash of humor to navigate successfully.
Haha, speaking of humor, I love that thought. If markets were like comedians at an open mic, would volatility be the punchline and stability the slow burn that eventually makes us laugh?
Maybe. And sometimes that unpredictability is what makes this daily routine so engaging.
Totally. Before we sign off, let's leave our listeners with some questions to ponder. How do you interpret those modest gains in the major indices, given the dips in tech and crypto?
Are you comfortable with the current level of uncertainty in global trade, or do you see it as a chance to recalibrate your portfolio?
And finally, watching these corporate deals like Apple, iSports, and Envirotech, do you think they signal bigger industry shifts coming?
Great questions. We encourage you to think about them, maybe share your insights, or even ask our AI copilot for some extra perspective.
Good idea. Well, that's it for today's deep dive. Thanks for joining us this morning.
Remember, PantheonAI is always here as your information copilot, guiding you through market complexities with reliable insights and maybe a little humor on those cloudy days.
We look forward to another day of exciting developments tomorrow. And please, keep those questions coming.
Absolutely. The best investment is in your understanding, and learning shouldn't feel like a full-time job.
Couldn't agree more. Thanks for tuning in, everyone.
Have a fantastic day ahead.
PantheonAI, your information copilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.